Welcome back to Benchmark. We now have excerpts of an exclusive interview with Hemaka Amarasuriya, the chairman of NDB Bank and non-executive chairman of Singer Sri Lanka. In this interview, we discussed the implications of the government's budget proposals presented to Parliament a couple of weeks ago, in particular the devaluation of the Sri Lankan rupee to help exporters. Let's now listen in as Hemaka Amarasuriya gives us his impressions of Budget 2012. Welcome to our show once again, Mr. Amarasuriya. Thank you for coming over here to our studios at Benchmark. Now, we have just completed the presentation of a fiscal budget, the fiscal budget for 2012. What are your first impressions for the nation in general where the budget proposals are concerned and for business as well?
It's by and large a development-oriented budget, and my opinion is that every sector of the economy has been given due consideration. There's a lot in it for entrepreneurs and businessmen, a lot of new tax concessions, new areas of services and manufacturing has been included. They brought in some industries which are what they call not actually import substitution, but another word used for it, product like cement, steel, pharmaceuticals and milk powder. Also enterprises already existing have been given concessions to expand the capacities. So by and large, it's a development-oriented budget to try and sustain the growth of the last 2 years.
Now, alongside the budget proposals, the President dropped somewhat of a bombshell that the Sri Lankan rupee would be devalued by 3%. Now, one feels this is to satisfy the IMF because they did hold back one of the next installment of our loan facility, amongst other issues, and also the central bank's refusal to let the currency float. How do you view this sudden pronouncement, and what is it going to do to the import sector specifically?
The depreciation was unexpected but inevitable, because if you looked at the expansion of the trade deficit with the import growth outstripping the export growth, though exports grew strongly, imports grew even strongly, the rupee was apparently becoming overvalued, and a correction had to be made at some point in time in order to manage the trade deficit. So what happened was, I think both exporters and importers were expecting the devaluation later rather than sooner, and they were caught on the wrong foot. Importers, let me start with the exporters. Some of them have booked forward, so there would be a opportunity lost in making profits, but that would be only in the short term. If they had booked 6 to 1 year forward, probably they would have lost the opportunity of maximizing their profits in the short term. But in the long term, the exporters would benefit by such a devaluation. They were asking for it. The importers are concerned, when it comes to capital goods, which are afloat now or arriving soon, if they had not booked forward, unlikely that they would have booked forward, they would have to take a loss in margin, because capital goods are transacted on a contractual basis. But when it comes to consumer goods, well, they'll just simply pass the price over to the consumer, and that would be the eventuality of a depreciation of currency.
Now, doesn't this carry the risk of inflation spiraling upwards, as it were?
I don't see that as a possibility, unless, of course, there are further devaluations to follow this. I hope there will not be in the immediate future, because if you look at commodity prices, if you look at the London Metal Exchange, the prices are dropping for, say, aluminum, copper, steel. The commodity prices are dropping because of the global downturn in US and Europe, as well as a trickling down of a slowdown in China and India. There's oversupply and demand is not able to meet the supply. So obviously commodity prices are going to come down, and this is going to help Sri Lankan industrialists. And finally, this slowdown in prices will move on to finished goods as well. So that could be counter this aspect of the devaluation. In fact, in the commodity market, the dealers are trying to prop up the prices because of the forwards, but the prices have now reached the resistance level. So it's almost beyond the control of the commodity brokers. So the trend globally is prices are going to go down, and it would probably mitigate the 3% devaluation. And I think it's very positive for the construction sector because most of the commodities like aluminum, steel, copper enters the construction industry, and Sri Lanka is on the verge of a construction growth or a construction boom.
What about the banking sector, Mr. Amarasuriya, and given that it is inextricably linked with the import sector, how is this devaluation going to affect the banking sector?
They will earn a favorable position by translating their currency in the foreign currency business units, and their assets and net assets and liabilities position in the balance sheet. But this is once again mitigating what the banks lost earlier on because the currency was devalued during the year. Earlier on in the year, the currency was revalued, I'm sorry. So what they lost in the first half of the year, they would gain. And where the trade finance account is concerned, I believe there won't be much change because imports might taper off marginally and exports would gain also, initially somewhat marginally and subsequently more strongly. So the trade finance account will continue to carry on as it was before.
Are you confident that the government will meet its fiscal targets for 2012? We are seeing revenue as a percentage of GDP being 14.7% versus 14.1% for this year, and expenditure 14.7% versus 15.6% for this year.
Let me look at it as a budget deficit per se. The government's track record on fiscal policy has been extremely good because if we go back to 2009, the deficit was 10%. They brought it down to 8% in 2010, and their estimate for 2011 is 7% versus a target of 6.8%. So judging by the track record of the fiscal policy division of the government, of the Treasury and Ministry of Finance, I believe it is possible. So we must give the government credit where it's due, and they've done an excellent job in gradually bringing down the deficit without disturbing the investment on infrastructure and public works.
Time now for a commercial break. On the other side, we have more excerpts of our exclusive interview with Hemaka Amarasuriya. Stay tuned. Thanks for staying with Benchmark. We now continue with our exclusive interview with Hemaka Amarasuriya. Now, these are reductions from last year's targets. For example, the revenue last year was 14.7% of GDP. This year it's 14.1%. And in addition to that, the government has announced that a salary hike or a salary allowance, as it's called, for public servants of 10%.
Let me first talk about this salary increase, because if you remember, if you go back to the period beyond 2009, for 4 successive years we had double-digit inflation, and there was hardly any adjustment to salaries. So the real wage earners, real incomes started dwindling, and it affected his productivity, his whole lifestyle. So these salary increases are inevitable, but the government has done it in such a way that 5% will be given beginning of the year and 5% on July 1st. So they are very conscious about the impact of salary increases on the expenditure budget. So I feel where the deficit is concerned, the government has done a lot of hard work and hard thinking, and while they have to give the salary increase, they are managing it in 2 stages. On the expenditure side, they will manage it. It's only on the revenue side that one has some doubts whether the tax collection process, the tax regime and the tax audits are going to fulfill the kind of revenue that they hope to earn.
So would you agree that an unprecedented number of sectors are going to benefit from this budget? Where do you see excesses and where do you see the shortfalls?
Let me look at it this way. The shortfalls would come, for example, if I give two examples to you, the government has wanted the banking sector to invest on the SMEs. And the government is setting an example through the People's Bank and Bank of Ceylon. They are going to open special SME branches in the outback, in the hinterland. Now, if the private sector commercial banks, which together is bigger than the 2 or 3 government banks, if they do not respond to this call, and if they hold back and not feed the SMEs because of their NPL ratios or because of their policy or whatever, then we will not be able to implement the budget. There will be the shortfalls. Similarly, there are lots of investment attractions, investment opportunities, inviting the private sector to come on, get into the act and start investing in the economy. But if the business sector or the FDIs don't respond to these alluring of the government, then there would be a shortfall. Frankly, I don't see much excesses in this budget, though it is widespread in trying to satisfy every sector of the economy, and it would be a very challenging task for the government and the budget department to monitor and ensure a proper compliance and implementation.
Now it seems to us that the government also wants the inland revenue to get tough on voluntary taxpayers through extended audits, investigations, etc. Now, which to some of us means that the authorities are being given the green light to harass maybe law-abiding citizens, and they're doing that already, but this is almost like a carte blanche. Go ahead, harass them, get what you can. But the tax evaders, they're evading anyway. How do we work this out?
The government had a policy of reducing the nuisance taxes over the last 2 budgets. One example is the debit tax, which went off, which was really a nuisance, right? A nuisance tax. Even the government calls it a nuisance tax, Treasury. Unfortunately, they have not addressed this issue enough in this budget. Maybe there are other more important things to do, comprehensive budget. Take the social SEC, Social Economic Charge, they call it SEC. Though they have increased the threshold to from 25 to 50 million a quarter, it still dissuades a small entrepreneur from increasing his revenue. So it's a negative tax. And what they've gone and done is they've gone and said, if you make profits, you won't have to pay this tax. But you can only find out that you make profits only at the end of the year of assessment, right? Not at the beginning. And there are so many of these small entrepreneurs. I've studied them a lot over the last 25 years because I've been chairing an industrial service committee in the South for a long time. These guys make profits 1 year, they lose money the next year, they don't keep proper books. So they do not know where they stand. Are they making profits or losses? So they'll be bound to pay the socio-economic whatever tax charge. You see, when you have top line taxes and bottom line taxes both, you're like a ham between the sandwich. You hit on the top line and the bottom line. So I think top line taxes should be only for indirect taxes and not for income taxes. For the small entrepreneur, if you study his psyche, this worries him a lot. He says, you know, even before I earn any profit, I have to pay tax on my P&L. And it might dissuade him from going over the threshold. I don't think the government makes much income out of this, so I would invite the government to at least take it off the next year if they can't do it this year.
Mr. Amarasuriya, despite the government's tag that the budget is development oriented, the stock market shed 22 billion rupees in market value just on budget day, and it hasn't stopped ever since. Now, is this a contradiction, or are we continuing to see cowboys at work?
Frankly, I have no idea how this stock market operates or how these manipulations takes place. If we knew that, we would have also made some money following the cowboys. But what I think has happened is that the market is now reacting. Genuine retailers, retail investors are moving out of the market, and they're waiting for the fundamentals to return. So gradually the stock market has got eroded. It's losing its credibility. And you know, I'm involved in so many blue chip companies in the stock exchange, so we're very sad about it. Now, to my mind comes Margaret Thatcher's famous quote, if you buck the market will buck you. And that is exactly what is happening to our stock market today. They bucked the market, and now the market is responding by saying, no, we don't want to have anything to do with this. We're moving out till the dust settles and there is sanity in the stock market. So I hope the cowboys and their ponies move on to another playing field and leave us honest citizens to live the life the way it should be lived.
That was Hemaka Amarasuriya. The Voice of Business is up next, but first some messages from our sponsors.